if a failure takes place, then keep in mind that because we're at the balance area high, there is some room to head lower. If it turns out to be a bigger failure, and let's say, tomorrow the market opens and the advanced decline line is very bearish, and the tick is completely holding below zero. So the momentum is clearly to the downside. When those things are taking place in real time and they're happening off the balance area high, you know that there's a lot of room to go lower, right? Because if you fail in a big way at the balance area high, now anyone who was long within that balance in anticipation of the breakout is essentially forced out of their position. And that ends up bringing just much more selling to the market, which can lead to a bigger downside move just as easily. And this week we still do have a couple of catalysts pending that can result in some movement. I think we have an ECB announcement tomorrow. So anytime there's a central bank announcement, this market is pretty sensitive to it. Because it's just the market's so propped up right now by this zero interest rate environment, and in Europe a negative interest rate environment. So it's just very sensitive to any changes in interest rate policy. So we just have to be on top of that. So I hope that answers the question for you and helps you figure out a strategy from day to day. All right, let's see if there's anything else. I know Ziad's been answering some questions. I think mostly everything is covered. Okay, so I think we're good here. So at this point, we can just get into our discussion of the market context. Now, a lot of it is actually something that's already been covered by the previous question. The fact that we are in a very balanced type environment, and we're very close to an inflection point. Up here there are two scenarios that can take place. You're at the balance area high. Either you are going to break out, and in order for that breakout to happen, again, we need to see that rising advanced decline line, tick holding above zero and printing some pretty decent values, and participation from the Russell and ideally NASDAQ as well. So those are the conditions we need to see in real time for a breakout to take place. Now, if a breakout does take place, then we have to keep in mind that beyond 9150, there is no hard resistance in the S&P. 9150 is the all-time high. So if you are breaking out above that and you're doing so on strong internals, then the market can just continue going until the buying dries up, until the range gets exhausted for the day. And at that point, we can actually follow up with even more upside movement and continuation, because then we would have time frame alignment. The daily chart would be pointing to the upside. It'll be bullish. The smaller time frames will also be bullish. But until that happens, this is valid resistance. And that's why we need that big momentum to push through it. It is valid resistance until broken. So one scenario is that we break out. The other is that we fail. And we put in a failure over here, and we start reversing back down towards the recent balance area low. So if you start failing at the highs and you start failing at 77 to 79, then you can quite easily go right back down towards 64, 65, and even back down towards, the 59 to 60 area, which is also a high volume node, and then perhaps even test the swing low at 54.75. So right now, those are the two potential scenarios. Anytime you are at a balance area high, really there are only two possible scenarios. And the third one is that we continue balancing a bit up here because we don't know when it's going to break out or when it's going to fail. So until one of those scenarios happens, we have to be very neutral with our intraday bias and understand that there could be some continued balancing up here before the breakout really takes place or before a failure takes place. But the important thing to understand is that we are at an inflection point, at a decision point where either the buyers really have to step in a big way, and push the market higher. And if they don't, then anyone who's holding long within the recent balance can view this as an opportunity to take profit and take some risk off the table. And if that happens, then the downside scenario can play out. So over the next 2 to 3 days, that's really what we're going to be looking for is, does the market put in a breakout or does it put in a failure? And we should be prepared either way. Successful trading is not about predicting which one is going to take place, one or the other. It's about being prepared for either scenario and then being able to read the market as a day trader in real time to identify which one of those scenarios is in play and then trade that. So that's going to be a focus for the next 2 to 3 days. All right, guys, that is pretty much a wrap. Thank you for all the questions that you sent in. I hope everyone is trading well. And like I said at the beginning of the call, I think that the opportunities are going to start getting better from here on out because September, October are historically high volatility months. And then, with the U.S. election coming up and everything else happening, I think, it's going to be a good time for day traders to be involved in the markets. So, again, thanks for the questions. Hope you're all doing well. Enjoy the rest of your day. Have a great weekend, and we'll catch up again next Wednesday. Good night.